There's a lot of shady stuff that happens in the mortgage industry, despite many laws in place designed to protect you as the consumer. And while I can't go around policing every Tom, Dick, and Harry, what I can do is teach you how to understand the single most important document in the mortgage lending world. The document I'm referring to is called a loan estimate, or an LE. And now, regardless of what state you're getting a mortgage in, every single lender is required to use this. And this is also a standardized form, meaning that the document will look the exact same from one lender to another. This is what allows you to compare different mortgages between different lenders seamlessly and smoothly. So let's start with a general overview before we totally dissect this. The loan estimate is a 3-page document that contains all of the details about your mortgage. This is everything from the rate and terms down to the costs associated with it. And as the name implies, this is still an estimate at this point. So you may be saying, what's to keep a lender from making these costs come in low and then changing them later? Well, there's a few things that protect you. The first is that it is actually illegal for a lender to do that. But the second safety net is that there are certain costs that cannot increase at all from the loan estimate to the final closing disclosure. There are also certain costs that can only increase by 10%. And then there are some costs that can increase by any amount, but I will walk you through what to look for in your loan estimate to know if anything suspicious jumps out. Now, we're gonna use a sample document from the CFPB, and I'm also gonna give you the link in case you want this as an additional resource. So at the top of the loan estimate, which is where we'll start, you'll see general information about you as the applicant, the property, and some details of the loan. The main section here that you wanna pay attention to is the rate lock section. So if you've gone ahead and locked your rate and are moving forward with this lender, you'll see that box selected as yes. This is fine. You just wanna make sure that the rate is locked through the closing date, because what can happen is if it isn't, there will be rate extension fees, and you need to make sure that you are not liable for those. However, the situation you'll likely find yourself in is that you're shopping around for a mortgage and you have multiple loan estimates. So this box will be selected to no, which is fine. What you want to make sure when you do go back and select the lender that you want to work with and they do lock your rate, you want to make sure that they did not change anything or sneak any fees into this loan estimate to make that rate more desirable. And don't worry, I'll show you how to do this when we get to page 2. The next section is the loan terms. And outside of making sure that the terms are correct, you want to pay attention to the right-hand column that says, can this amount increase after closing? If you're in a fixed rate loan, it will always be no. However, if you're in an adjustable rate mortgage, you will see yes in this column. However, spoiler alert, if you are in an adjustable rate mortgage, your loan estimate will have additional information than what you see here. Moving on, we've got the prepayment penalty section. This will depend on the loan and the state in which you're getting that loan. This just means if you pay off that mortgage before a certain amount of time has passed, you are liable for a prepayment penalty. Lastly is balloon payment. This would be if the last mortgage payment of the life of the loan was anything larger than what you see here. And this would not be a conforming loan, so you're very likely not gonna ever have to worry about this. Next is the projected payments. And I'll breeze over principal and interest and just provide you with a calculator should you need to fact check this. And we'll start with the monthly mortgage insurance. So anytime you're putting less than 20% down or in an FHA loan, you'll have a monthly mortgage insurance. In this particular example, the buyer is putting 10% down, so that's why you see a fee charged here. But you can see that after they've made 7 years worth of payments and starting on year 8, they will no longer have this because they will have a 20% equity position and it will fall off. Next up are gonna be our escrows. And I'll talk more about this later in the video, but if you're putting less than 20% down, these are mandatory. So what you're gonna do is each month when you're making that total payment, a portion of it is going to your real estate taxes and your homeowner's insurance. So when we put all of these together, you can see your total projected monthly payment. The last section of the first page is the estimated closing costs and estimated cash to close. Now this will make a whole lot more sense once we've gone through page 2 of the loan estimate. So we're gonna table this and come back. Page 2, section A. This is my absolute favorite spot on the loan estimate because this is where you find out if your lender's trying to screw you or not. So let's start with fees that are totally normal to see in this section. These might be considered processing fees, underwriting fees. You might see them as an application fee. Now there's no set cost here from company to company, So you have to do a little bit of due diligence, but in our markets in Illinois, where we do most of our business, right in a range of about $1,500 seems to be quite common. Now, here's how you know if you're getting screwed. There's a line item for something called points or origination fees. This is a fee that you are paying as the buyer in exchange for your interest rate. So unless this has been conveyed to you that you are paying for that interest rate, you should never see anything here. And if you do, you absolutely want to be having a conversation because something is not right. Section B are all third-party services required by the lender and chosen by the lender, meaning that you cannot shop for these. What you can do, however, is compare one loan estimate to another loan estimate from different lenders and make sure that these charges are in line. My best advice here is don't count the pennies. What I mean by that is don't choose one lender over another because there's a $30 or $40 difference in their credit report fees. Look at the big picture here. Section C is where you're going to see the biggest chunk of your closing costs. And that's because all of the title fees fall into this category. Now you can shop for these services. And if you're purchasing an estate that uses real estate attorneys, you're likely going to lean on them to do this for you. However, if you want to make sure that the fees are in line, here's a great link and resource where you can plug in all of the details from your transaction and get an opinion. Section E are the costs associated with transferring the ownership of the property to you as the new buyer. Now, outside of the recording fees, what I want to call your attention to are the transfer taxes. Depending on the city in which you're purchasing, you may have a charge for this line item. So in Illinois, where we do majority of our business, we'll utilize the city of Naperville. Naperville charges $1.50 for every $500 spent in purchase price. So if this sample purchase was in Naperville, the buyer would be paying $540 in transfer taxes. Section F is our prepaids. And one of the biggest charges here will be your homeowner's insurance premium. And that's because you're required to either pay the full year premium or 6 months at the time of closing. Now you get to shop around for this, so you can compare coverages and rate and ultimately decide what's best for you. The next thing is going to be the prepaid interest. Now this is totally dependent upon the day of the month in which you're closing and how many days are remaining in the month. So if you close in the middle of the month and there's 15 days remaining, you're going to pay the daily interest for 15 days. So if you close close to the end of the month, this number will be smaller than if you close in the beginning of the month. Next would be if you had an FHA loan that required a mortgage insurance premium, you would see it listed in this category. And lastly, depending on the terms of the contract and the time of closing, you may see real estate taxes here. Section G is our escrows. So if you remember from the first page of the LE, this buyer's total monthly payment is $1,050 and $206 of that is going towards their monthly real estate taxes and monthly homeowners insurance. So what happens is at closing, these accounts need to be set up. In each month, when you make that total payment, that portion will go into these respective accounts. So that money is there when the bills come due the following cycles and they're paid on your behalf. But what happens is, because homeowners insurance and real estate taxes will likely only go up, the lender wants to make sure that there's some cushion in these accounts to get you started. So that's what the charges are here that you see. Section H is what we call other. So if you elect to purchase an owner's title insurance policy, you'd see that listed here. And if you're in a state that utilizes real estate attorneys, you would see your real estate attorney's fees listed here as well. So now that we've reviewed all of the fees associated with this loan, we're just going to take Section D, we're going to add it to Section I, and that's going to give us our total in Section J. Additionally, if there were any lender credits that were being issued, you'd also see them in this section. But since there isn't, we know that our total estimated closing costs are the same number that you see on the bottom of page 1. Now let's go ahead and put this all together in the bottom right-hand section. So we just determined that we have estimated closing costs of $8,054. We also know that we're putting 10% down, which is $18,000. So we're going to add these two numbers together. However, the buyer gave earnest money of $10,000 at the time of making their offer. So that money is going to apply to this transaction. So we're going to subtract it out. And when we do this, we get our total estimated cash to close of $16,054. And if you go back to the first page of the LE, this is where that number came from. Page 3 of the loan estimate is just additional information about your loan. And in my opinion, is the least important page of this document. So the top will have information about your lender. Below that will be some comparisons, such as your annual percentage rate, which is a really big buzzword, this isn't your interest rate. This is just the cost of the loan expressed as a rate. And then below that are going to be some other considerations, such as if the servicing of the loan will be transferred when this loan is closed, as well as future refinance, what to do about late payments, and an appraisal. Now, if you remember to the beginning of the video, I said that there are certain costs on a loan estimate that cannot increase. There are certain costs that can only increase by 10%, and there's some costs that can increase by any amount. Now, this is true, and we're going to get into it, but there is a rule that trumps all of this. So if your loan, if any of the following happens on your loan, it will result in something called a change of circumstance, and these rules go out the window. So assuming there was no change of circumstance, here's the cost that can increase by any amount. Prepaid interest, property insurance premiums, or initial escrow account deposits, fees for services required by the lender that you have shopped for separately, and fees for third-party services that the lender does not require. Again, assuming no change in circumstance, here's the cost that cannot increase at all. Fees paid to the lender, mortgage broker, or an affiliate of either the lender or mortgage broker for a required service. Fees for required service that the lender did not allow you to shop separately for, and transfer taxes. And lastly, assuming no change of circumstance, here's the cost that can increase by 10%. Recording fees, fees for required services when you have chosen a third-party service provider on the lender's written list of providers. Although this document is still just an estimate at this point, you are now equipped to know exactly what to look for, what questions to ask, and what costs can and cannot increase. So what will happen, assuming you move forward with the loan, when you get ready to close, you'll receive a document called a closing disclosure. This will look very similar to this loan estimate, but it will contain more information. You can actually review this document to make sure that nothing changed that wasn't supposed to from your original conversation with that lender. As always, I appreciate you being here. If you enjoyed this video, please like, comment, and subscribe to the channel, and we'll see you on the next one.